Okay, now we're good. Welcome back, friends and enemies. I'm not alone today. How's this? Len hasn't even been here for a show yet. He refuses to come over. My name is Joey. I'm here with Drew and Taylor, the Wealth Playbook. Are you guys both Sugar Team?
No, we're both Wealth Playbook,
Okay.
but we have separate real estate companies.
We're talking about real estate and Bitcoin today. It's a popular topic. The Karadzes do it. I think these guys do it just as well or better. But first, the sponsors. Do you guys want to talk about Bull Bitcoin? Do you use Bull Bitcoin?
We love Bull Bitcoin.
Talk about it. Well, I have a sip of my coffee here.
I mean, if you want that non-KYC Canada Post good stuff,
Can't beat it.
Yeah.
It's incredible. You guys ever sell your Bitcoin there? You pay your bills or anything?
I didn't know there was a sell
yeah, we
button.
didn't know that that's a possibility.
I like that. We got to get that in the messaging somehow. I didn't know there was a sell button. You can sell your Bitcoin there. You pay your bills. KYC free. Canadian Bitcoiners have a promo code. You can go to iwantbitcoin.ca. That's it. You just go there and use the promo code and you can buy your Bitcoin. You can't beat it. Second sponsor, EasyDNS. Actually, Mark is our first sponsor, but I wanted you guys to talk about Bull because I figured you know more about it. Now, I found out today that Mark is popular in this room for a dinner in Miami. Any good stories from that dinner in Miami?
Oh, that was an amazing dinner.
I like that. Okay. EasyDNS did our website. They've helped us with a ton of stuff. We don't have any emails through there yet. I think we have it set up, but we haven't actually done it. But they have a lot of stuff. They can do domain registrars. You can do DNS. Obviously, it's in the name. VPS. So if you want to run a Bitcoin node, Nostr Relay, virtual private server, nodeless implementation, any number of things. You got something to do, and it's online. Mark is your guy. Go talk to him. EasyDNS.com. CBP Media is the code. You get half off your first buy. And like I said, if you want to start whatever it is for you, this is the place to do it. Okay, boys. Now the sponsors are out of the way.
Mark was into Bitcoin very early, so
he's been around. He's a big time.
Been around the block. He knows what he's talking about.
He's been taking Bitcoin for his business for the better part of 10 years now.
Yeah,
wow.
That's
how would you even take Bitcoin 10 years ago? No one knows, but he's been doing it anyway. Okay, so
he actually, I think he did tell me that in Miami, but it's some obscure website back then.
Legendary.
Yeah,
legendary. Tell me who you guys are. Taylor's been on the show before. Drew, you've not been on, so tell me about the show. I gotta fix your name. I might get up again and fix your name. You guys talk.
Don't worry about it.
No,
Taylor.
we have to.
Who's Taylor?
We gotta do things right.
Taylor's the main attraction.
Drew and I started investing, together in 2018. We started meeting on a monthly basis, and it just sort of took off from there. And eventually, Wealth Playbook was created. But we both have our own independent real estate businesses.
Yeah, Wealth Playbook is like it's essentially a financial blog that we created because once we discovered Bitcoin, we started telling people like you should buy Bitcoin, and then they said why, and we're like, oh, I never got this far. Like you should just buy it, and then we're like, okay, well now we got to put all our thoughts on paper. So essentially the genesis of our website / financial blog was just like to track explanations on why you should buy Bitcoin.
Right. And also we looked at real estate as well. Like we did investing in REITs and we did some gold, but I'd say we're mostly focused on Bitcoin now and also talking about the differences between real estate and Bitcoin and the similarities. And I think there's a lot of opportunity to develop that real estate and Bitcoin combo. And we saw in Preston Pish's Leon Wankum had his amazing interview. And, I think we're going to see that field develop, and I'm excited to contribute.
Okay, so I have to say the last time you were on, Taylor, this is Drew's first time, Taylor's second time. I got a lot of good feedback for the content, but also because people like the slides. Now, I told you guys, I think you're on some kind of mental illness continuum, producing slides for something like this all the time, but it's fine with me because it's good content. Now, before we get into the slides, do you want to talk a bit about sort of your base case, like set the floor here for people? What are we going to be discussing today? Why is it important to people, especially those who are using real estate as a cash generator and as a sort of business? Is this something they should be concerned about more than other people? Where do you want to start things off?
I think that what we're looking at today is kind of comparing real estate and Bitcoin as an asset class. And if you imagine the economic energy that you generate, if you imagine it as a liquid, so you take this liquid, you're going to put it in this little bucket for Bitcoin or a little bucket for real estate. And we're going to talk about what are the differences with the buckets? How does, what preserves the liquid the most? What are some of the pitfalls in real estate? What are some of the pitfalls in Bitcoin? I think there's a lot of hidden problems in real estate. And so if you look closely and you look at all the data, you're going to be able to see where the problems are and understand it. And I think we're going to try and give you some some light on that.
Just to add, like Taylor and I have been in real estate a long time. Like we both bought our first places and lived in the basement of our separate rentals, which we didn't even realize until we sort of reconnected. And we're like, oh, you did that too. But real estate was an excellent avenue to like maintain and grow your wealth for a very long time. But having been in it a while and sort of Taylor and I both have had sort of investment problems. I do land development as well. There are, comparing it to Bitcoin, which we've not been in for nearly as long, there's so much less effort in Bitcoin. And I say that, and risk. And I say that both as an opportunity and as like a lazy thing. Like to maintain your wealth in the fiat system, like you have to work increasingly hard and take greater and greater risk.
Yeah.
And in Bitcoin, it's the opposite. Like anyone can plug into it.
Yeah.
I think a lot of people think Bitcoin is risky because of the volatility, but I don't think that they understand the real risks of the asset class. And I think that's what the world has to digest, is understanding where the real risk is. And actually Bitcoin is the low risk thing and real estate is the high risk thing. And it's going to take some time to understand that, but hopefully our little slides will give you an edge.
But Taylor, it's volatile.
Yeah.
It only makes 144% a year, not in a linear line.
I love this because I think that I've started to use this framing more and more, although I'm sure you guys will be better equipped to explain exactly why you use this kind of conservative framing. So for the audio crowd, I recommend you go to video. We're going to be playing around with the many, StreamYard opportunities that we have here and going through some of these slides. So this is the title slide here.
So we got our
great
nice,
logo. Great. Who did those little animations? Those are fantastic.
We hired a girl named Kimmy from our high school to make it for us.
Kimmy, give me a show. We could do something like that.
And that was before AI.
Yeah.
This
is like hand drawn.
Nowadays, you throw that into a program.
Throw it into.
Sorry, Kimmy, you might lose some of your work.
Kimmy, if you want, I'll still hire you. Okay, so let me just see if I can. Can I make this go full slideshow? I can. Nice. Yeah. Okay, great. So let's go to the second slide here. I guess this is the first slide. This is your boy, Rob Cilio. You mentioned this guy a lot last time we spoke.
I like Rob, and I think that he provides some good analysis. And before we get deep into the real estate versus Bitcoin, we thought we'd give you guys a little market update on the GTA because last time I was here, I gave you mostly GTA market updates.
Yes.
So we want to do some of that. And the market's a little bit unique right now. We have the Christmas just happened, inventory is super low. And this chart that Rob makes, which is my favorite chart in all GTA real estate, calculates how many months of inventory. So like if you have a set number of inventory, how many months it'll take you to clear it out.
Yeah.
And what we can see here though, is that there's a real divergence between product types. And so that blue line, that dotted blue line at the top, that's for condos. And so the condos are at like 5.5 months of inventory. But if you look at like detached in Toronto or freehold in Toronto or Durham, they're actually a lot lower, like 3.5 months. So there's quite a spread between
that makes sense
product types.
Yeah.
Okay. And part of it is in the condos, you have more landlords that are going to be more sensitive to interest rates. So they're going to be dumping, as you're not going to sell your house, you're going to live in your house.
Yes.
But you might sell your investment property. And we also have the issue where Airbnb, the government's targeting Airbnb holders. So a lot of Airbnbs are in the condos as well. And so I think that's an important chart that's saying, hey, the challenge in the market is more in the condos and the speculation and the Airbnbs and the pre-construction. We hear about all the fires at the building sites. And so, wherever you have the speculation, that's where we're going to have the pain. But in the regular family homes, I don't think we're going to see as much difficulty there because everyone still needs a cave and the government's jamming the population up. So, I don't expect a big problem with those asset classes, but with the speculative stuff, I think we'll see more trouble.
Well, and just in terms of the numbers about that, it's about 15% of all Canadians, almost 1 in 6, like has an income property or a second property, like multiple residences.
Okay.
So we're talking about like a large sector of the population. And because real estate is, it's hard to compare numbers, but I would say like 3x over the last 10 years, roughly, like 300%-ish,
yeah.
Maybe a bit more. There's been a lot of piling into that secondary housing market. And it's like, oh, I have one house, I have two houses, because it's been appreciating, but really that's more sort of the dollar depreciating, but we'll get to that.
The other thing that's going on in real estate is, and this is part of where I'm saying the real estate is the risky item, is that and we're going to get into this in a second, but like if you imagine real estate like a complex system where it has all these different components, you have the government that's managing the system and trying to, regulate the population, the GDP, the interest rates, and all these things. The problem is ever since COVID, the intervention by the government has really increased and the volatility has really increased, and things are changing, like taxes are raising quickly and regulations are changing, and Oakridge Rain, all these things. And so that's where the risk is in real estate. It's in that if the government adjusts the system, it may impact you negatively. And so whereas in Bitcoin, Satoshi doesn't come out and change the code and change the rules. And so that, I think that comes down to property rights, and we're going to focus on that today.
I like that. Now I have a question for you guys looking at these lines and thinking about government intervention. Do you expect I guess, what do you call this exactly? You call this
months of inventory.
Months of inventory. So do you expect some of these lines to go up while others go down? Like I think about, for example, the number of months for a Toronto freehold, a Toronto semi-detached, or Toronto detached, or whatever. I would expect that there's almost no way, whether price goes up or down, that line goes down to the right. It almost certainly will continue to go up as things continue to move, right? I mean, there's just not that much inventory at the end of the day. And so whether the price goes up or down, people are going to be a little risk averse in terms of like leaving their cave, as you mentioned.
So what I would say about this is that when I look at this chart, one thing that I noticed, so you're right that going down is better.
Yeah.
And going up is higher. Mm-hmm. But if we look at the fall market, which is sort of here. Okay. You can notice that only the red line goes down. And what that means is that in the last fall, the only market that showed strength was the Toronto freehold.
Yeah.
All the other markets weakened in the fall. And that reminds me of 2018. And in 2018, we had the surrounding areas of the GTA correct, but the core itself actually increased in price. And so when you get into an environment that's a little bit more turbulent or a little bit more volatile, the city itself actually does better. But this time, the city's going to do better, but the condos are going to do weaker. So you have the freehold in the city that's going to be probably the strongest product category. And that little red line going down in the fall is the signal from the market saying, hey, there's still a lot of demand for the freehold in Toronto, but there's not as much demand for the condos, or there's not as much demand for York or for Peel. Right. But Durham actually is doing very well. Durham is the orange dotted line. So it's actually the lowest. And I think I mentioned this on the last one and I got some laughs, but the reason that Durham is the lowest is because when you have a recession or a problem, you sell a lot of rice and you don't sell a lot of steaks. And so Durham is sort of the cheapest real estate that has a train to Toronto. And so that's why it doesn't have a high MOI, because when people are struggling with the cost of living, they're looking for those cheap places to go. And Durham is like the cheap place in the GTA, but also people are going to Calgary and they're going to Newfoundland and Nova Scotia. So I would say that most categories are probably going to increase as we go through the year and inventory increases. But maybe keep an eye on Toronto freehold and Durham as outperformers versus the others.
Another reason why the inventory would be increasing is you're not seeing the same returns that you have seen historically in the last 5 years. Mm-hmm. And you're also not seeing, like, in an investment term, you call it exit liquidity. There's not as many buyers. So in terms of, okay, everyone's made these properties and they've made a lot of money. Now they want to cash out.
Yeah.
If 15% of the people have investment properties, how many of them, what percentage of that 15 are going to hold it through the next 4 or 5 years? Mm-hmm. Probably some people are going to take some profit off the table, especially with like interest rates, which is another thing that there's no control over as the landlord.
Right.
So you're only going to see sort of the best value properties selling and a few more that will stay on the market, and that further increases the inventory.
All this being said, the market's actually pretty good right now. Like we sold almost everything we had in December at the Sugar Team. We have like 3 properties for sale. 2 of them have offers on it already this year. So I think the market is better than most people think, but it's going to be volatile because we don't know what the government's going to do. We don't know what's going to happen. And that's where the risk is. We just don't know what's going to happen next in the real estate drama.
Well, and you also don't have the control. Like, you'll notice the inventory's gone up since interest rates have gone up.
Yeah.
And as a landlord or as sort of investor, I'm not telling the government, the central bank, like, these interest rates have been more favorable for me, therefore they should stay, right? Like, you have no control.
Okay, so I want to know here, shouldn't, like, this is my lizard brain talking, but if I look at like steaks versus rice, okay, terms you guys are using here for sort of the different quality of home available, shouldn't a couple of these lines move inversely? Like, if there's less steaks being sold, shouldn't rice really be a sort of clean, perfect counter to that line moving the other direction. I don't really see that here.
You know what it is though? It's not that they're going to move indirectly. It's just that the market's stronger. So there's only 3 months of inventory in the rice, but there's, 5 in the 5.5 in the condos. Even though the condos should be cheaper, they're not homes for families as much. And so that's why they're not doing as well. Like the family home, I think, is still safe. It's still a good product that everyone needs, but it's more the investment properties. But I think it's really hard to see much from this chart yet because we just had Christmas. So it was rising since May. Okay. So the market was weakening since May. And then we had a pullback here for Christmas because a lot of listings left, but the sales didn't increase. And so as the inventory comes back on, we're going to see that MOI rise. But I don't know what's going to happen. And that's the whole point about the volatility in the real estate is I have to watch many things every day to understand the complex system to see what's going to happen. But, I don't worry about my Bitcoin at all. I don't look at, that's not true. I look at the hash rate, but I don't really look at much. And so I don't worry about it all. In fact, when we had the regional banking crisis in March, I was at Disneyland and in Orlando with my wife, and I didn't even have a computer. I had a cell phone. And as the banks started to fail, I sold all my real estate investments like in REITs because I was worried that the cost of capital is going to rise because the banks are failing. And what did I do? I moved it all to Bitcoin because that is the safe thing. After I was so worried in that hotel room as the banks are failing and all these things, as soon as I had moved all of my capital into Bitcoin at that time, I slept like a baby.
Yeah.
I went back on my family vacation. And so I think it'll take time for people to understand that. But the more that I'm involved, the more that I realize less risk in Bitcoin, more risk in real estate.
Okay, let's move on.
I'm sorry, I'm just getting the mental image of Taylor sleeping like a baby.
I'm trying to think about whether or not you want a picture with Minnie Mouse or Mickey Mouse first. I don't know. There should be a line for like Disney vacations. Isn't that like a traditionally strong indicator of like where the American consumer is in terms of their sort of disposable income? Like how many people are wasting their money, at Disneyland? I mean, if you have small kids, maybe it's not a waste. I went when I was a kid.
I can tell you, I don't let my wife stay at the Disney resort. So we stay off the resort and drive in. But, if Bitcoin gets to 100K, maybe we'll be staying on the resort.
They have a sports hotel there. I stayed there when I was a kid. Anyway, story for another time. Okay, so we got now average annual asset performance versus monetary inflation. This is an important chart. A lot of people thinking about this chart, even if they can't quite put it in such a clean and easy to digest form here. So talk to me about this.
Well, this is like a play on Sailor's chart. So I made this chart sort of copying Sailor's chart. But the only difference is I added in GTA real estate. And so I took like the returns of GTA real estate over a 10-year period based on the median price. And so it's appreciating at like 11% a year on average. And the monetary inflation, according to Sailor, is 8%. So that means GTA real estate is beating that monetary inflation. So are REITs. And REITs are just stocks that own a portfolio of real estate. And they're giving you that 10% return. And actually, they're giving it to you with a little bit less risk than the S&P 500. So they outperform the S&P. And then you have the S&P 500. Those three things, if you own them over the last 10 years, they've been increasing your purchasing power. But there's not many things that do that. You want to go over the ones that lose the purchasing power, Drew?
Well, the other thing I was going to say is everything on the left of the chart has kept up with monetary inflation, ... to date.
So far.
Those assets have a greater risk and a greater PE to go forward, right? Like there's already a lot of juice that's been squeezed out of those to maintain monetary inflation. So if you look at the average like PE for the S&P 500, like what is it, 25?
Yeah, it's
high.
30,
yeah, like 27, I think last I heard. Yeah.
Taylor and I both like grew up or like cut our teeth on like value investing. So
Warren Buffett style.
Warren Buffett, intelligent investor, like the PE in those books, it was like 10.
Yeah.
So what is the likelihood of that continuing, like the things on the left continuing?
Does it matter what the PE is? Like the way I look at this, and I think a lot of Bitcoiners, miss this sometimes because they're so anti-stock market, anti-real estate. The way I look at this is I'm in like a sort of step function growth curve on the left because of things like, automated investing or shitty government policy that pumps up real estate prices or, whatever XYZ other thing you want to talk about that basically automates the growth on the other side. Now, is the growth real or nominal? Like, how much of it is real versus nominal? I don't know. That's a debatable point. But I think the thing that the Bitcoin crowd misses sometimes is that the reason these are guaranteed isn't necessarily because, or sorry, the thing the investing crowd misses sometimes is that the reason these things are guaranteed isn't because they're necessarily good things. It's because people know that they lose for sure on the other side of this chart, right?
The money has to go somewhere.
Exactly. Exactly.
The other thing that we couldn't show on this chart is the average return of Bitcoin, because it doesn't fit. So, you know, you only see up to 12%, like 140% is
I'm covering it with the picture-in-picture thing. I don't know where else to put that.
It's a 10x on those assets.
It's logarithmic, not linear, so it can't fit on the chart.
Right.
But to focus on the things on the right side of the chart, like first of all, the bonds. Like the bonds are a requirement to have confidence in the government maintaining like a stable balance sheet.
Yeah.
Of which they historically have not done.
Mm-hmm.
Any sort of G7 country hasn't, right? So your confidence in the government to maintain a stable balance sheet is essentially on the bond side, and the problem is essentially like putting a microphone to a speaker, right? You print more money, creates further inefficiency. You monetize your debt.
It's a great way to put it.
You're printing the deficit, so you're like, oh, well, that actually makes it worse. So, and then all of a sudden you're just getting loud feedback because, you know, it's not keeping up with the money that you're printing to cover the deficit.
Yeah. It's insane. And you guys don't have anything related to currencies here. I don't know how you would, but I think in Canada, there's another whole, you know, slide deck that could be prepared by somebody who dabbled in that, just how much value the Canadian dollar has lost. So you maybe have these gains nominally on the side of GTA real estate REITs and the S&P, but you're just getting absolutely shit kicked in the currency value.
What I would say about that is that when you buy a real estate, like let's say you buy a house in Toronto, you're that system that owns that real estate. You're in the Toronto system.
Yes.
You're in the Ontario system. You're in the Canada system. So you have those counterparties as municipal, provincial, federal government. And so wherever you buy real estate, it's not the same. Like all real estate is different. Each property is different. It has its own unique system. And that's where Bitcoin is different, where each sat is a commodity. So it's the same. And that's where the complexity comes in real estate, where you need higher skill to differentiate between the different products and the different systems and the different problems. But going back to what you said about the PE, why does the PE matter? Because the E in the PE is the earnings, and it's describing the utility of the asset. Mm-hmm. So the higher the PE is, the less connected to the fundamentals of the asset it is. So the higher the PE of the S&P 500 is, the less it is connected to the earnings. Or the higher the price to rent is, the less it's connected to the rent that it creates. And so the higher the PE goes, the less likely the future is going to look like that. And it's just like, if you buy the stock market at a peak, then it's not likely to give you the same performance that it did over the last 10 years, over the next 10 years. So the question that we're asking is, are real estate, the GTA real estate and the REITs, are they going to be able to keep up with monetary inflation in the long run? And one thing that's different, if we look on that left side, the S&P 500, what drives that, I would say, is actually the money supply. So it has a high correlation to the money supply.
They're scarce assets, right?
Right. But the REITs and the GTA real estate have a high correlation to the interest rates. So even though all three have worked over the last 10 and 20 years, the question is, if the long-term bond market cycle is changing, does the stuff that's sensitive to the interest rates continue to outperform the monetary inflation? And I'm not so sure.
The other thing that you sort of mentioned, with the decreased dollars purchasing power, the nominal value of real estate, it will cost more dollars to buy real estate. So many people think this is an amazing investment. It's gone up 10%, but no one associates that with their eggs or their bacon, right? Like, I'm paying 15% more. Bacon isn't all of a sudden this like new fad.
I'm hoarding bacon and eggs. Yeah.
I mean, you could, right?
Cold storage
like
in the freezer. Yeah.
In high inflation environments, that is common, like to hang on to those assets.
That's interesting, actually. You know, Drew, I don't think much about that, but you're right. You know, I almost, without thinking about it, now bacon's a good example of this. I go through a ton of bacon and eggs. Like
who doesn't?
I know, like a criminal amount almost. And when I go to the store and I see bacon on sale for $4 or $5 instead of $7, I'll buy 5 bags.
Yeah.
And I stash it. I didn't even really think about that until just now. How I'm already changing my behavior without even knowing, and sort of the market forces are pushing
5 years ago, was bacon even on sale, or if you saw it, you wouldn't be like,
I didn't really care. If it was on sale, I might buy a second bag and not freeze it, just eat more. You know,
and then,
like.
So part of that is, you know, the real estate nominally relative to like dollars that are decreasing in purchasing power, real estate numbers are going to go up, but relative to something that has a more scarce asset like Bitcoin, those numbers are nominally going considerably down. So, you know,
I don't think that the left fails. I just think it moves to the right. And so it'll do more than 0, but less than 8 is what I think. So, and the key is the only reason it's worked is it's because it's done more than the 8. But if you look at the return, like it's only 2 or 3%. So it's beating that inflation, but not by much. And so it doesn't take much of a change to the complex system for it to underperform. But you could have real estate going up 7% a year and everyone thinks it's great, but they're losing 1% of purchasing power each year. And Lynn Alden, her view of the next decade is we get nominal returns that are positive, but real returns that are negative. And
Yes.
I would be in the same camp.
It's essentially 1970s stagflation.
Stagflation, exactly. Yeah. Okay, let's go to the next slide. This is good content, boys. You guys are on fire tonight. Okay, so I say tonight, it's middle of the day, but yeah. Okay.
Depends what time you went to bed.
Yeah, sure. So here we got real home prices versus disposable income for the US and Canada.
So I'm just going to jump in here really quick, but this is really important because if you just cycle really quickly back to the chart before, real estate's at the top, right? GTA real estate is killing it. But a lot of the monetary juice has been used up in the last 10 years to like maintain that 10, 11%.
Go back to the next one. You'll see the gap, right? Between the price and the income.
So there are fundamentals in real estate. There are fundamentals in stock, right? If a stock goes up $1,000 per share, it has to justify that with like decreased expenses or increased earnings.
Right.
With real estate, the chart we're seeing on the right here is the value relative to incomes.
This is fucking nuts.
This is disposable income. So it's not to their total income, but that also is a part of like the cost of living rising and people have less disposable income.
Sure.
But, you know, we didn't get the correction in 2008 that the US did, but we got all of the stimulus. And so that I think is part of the challenge.
This chart keeps me up at night.
Yeah, I'm
it's
not
really insane. Like for people who are on audio only, it's the United States wages or nominal income. What is it? Real disposable income, I should say. So with house prices and the chart in the States, although there is some ups and downs, the thing is basically hugging incomes. Home prices are basically hugging incomes. In Canada, you know, like Taylor mentioned, around 2008, our chart basically goes vertical, and short of a few pullbacks, one of them COVID, you don't really see much.
It hasn't got back to the fundamentals.
If you're arguing against this chart, you would say, hey, who cares about disposable income? Let's see what the properties rent for. So let's go to the next slide.
Wait a minute. Why this bugs me because this is something people talk about all the time with interest rate sensitivity, right? So the one thing I think is worth talking about here is that chart on the US side looks more stable on sort of like the first glance, but it's also more stable because there's no interest rate risk in housing, really. You sign for 30 years and you're done, right? So you don't have to worry about that. In Canada, here you're at 400% home value compared to income, and you have 3, 4, 5 year interest rate risk every time you renew. Like this is a disaster waiting to happen. This is completely insane.
The US is a much better system.
Yeah.
Like when you look at it, they're closer to the fundamentals, but also they're structurally stronger because they have those 30-year loans. Whereas what the government should do here is families shouldn't be gambling at the real estate casino every 5 years.
You mean to tell me that the back branch guy at TD doesn't know enough to help me secure my future path?
No,
Wait a minute.
We should have at least a 10-year
He has weekend
option.
training, Taylor. How many weekend courses has that guy taken?
But like families shouldn't have to be worried about like thinking about their renewal 5 years in advance. Like you should make a purchase and then have a reliable cost for a decade or 2 decades.
Yeah.
And that's how the government could reduce the risk and the volatility in the housing market. It hasn't done that, but that again, we're going back to the risk in Bitcoin versus risk in real estate.
And then the chart on the right, the solution is much more uncomfortable.
The chart on the right is a Canadian chart.
Essentially, it's kicking the can down the road, right? So, you know, with money printing, the solution is like, well, this could cause a depression, so we're just going to print more money. But then 5 years comes, 5 years passes, and you're saying, you know what, the problem's actually worse now.
It looks like it might have been getting worse every few years.
My bad, guys. But we can't go back to the fundamentals because that's really bad now, and it's even worse in 5 years. So you know what we're going to do? We're going to print some more money, and then 5 years later, you go like, oh, now it's really bad.
Yeah.
So the cure, like Milton Friedman says this about inflation, it's the same with real estate. You know, the party happens at the beginning and the hangover happens at the end.
Yeah.
So we've had the party.
And I think part of it is too that in the US they have a lot more, like they can invest in the S&P 500. We can too, but they don't rely on their real estate to grow their wealth like we do in Canada. And it's sort of like everyone here, like as we're growing up, you watched HGTV, you buy your house, you rent out the basement, you buy the condo, you do the Airbnb. It's like, it's become like the path of what you're supposed to do. But all that's happened is the values have become speculative and they're not tied to the fundamentals. So when this is for disposable income, you go to the next slide, you're going to see price to income. So that's their total income, and also price to rent. And what we could see here is, Canada is the worst out of all of the G7 countries. So not only is our real estate expensive, but it's the most disconnected from utility out of the entire G7, which also means it has the highest monetary premium. And that goes back to that culture concept where everyone in Canada is using real estate to grow their wealth and increase their purchasing power. And because of that, the PE has gone so high that I don't know if it can continue to deliver those outsized returns. And that's what this whole conversation is about, is where is the risk?
It's also entrenched itself into the GDP of Canada, right? So, there's a large sect of the economy that builds houses or develops houses. And yes, Canada has high immigration. So, the population is growing and they have very poor policies for new home building. So, but people say, okay, well there's high immigration, there's more people coming in, there's not building a lot of homes. Therefore, it makes sense. But what we're saying is the premium has already been sort of sucked out. Like there's a high premium already.
And the government wants it to be a bubble because the bigger the casino is, the more the rake is. So they get more land transfer tax, more property tax.
This is it, yeah.
So the problem is the government has a huge bucket that's empty that they need to fill with that economic liquid. And they're going to go suck the liquid out of all the buckets of the real estate buckets. And they're doing that with rent control, with property taxes, with land transfer taxes, with regulations. And so that's where the risk is. Like, be careful where you put your liquid because someone's going to poke a straw in your bucket and suck it out.
Okay, let me push back on this. You guys can tell me what you think. When I think about regulation and your theory there about the government looking to take cash from the real estate sector, you're 100% right. You guys are spot on about that. They need that money. They want that money. And so far it's been lucrative to some level for them. Doesn't it mean though, that the longer this goes on, the more the government will try and take and add fees, add regulatory burden, add money to that bucket for them to later take? Doesn't that just keep driving the prices higher? To me, that maybe eliminates some of the quote unquote risk. I mean, there's still a ton of risk, but doesn't that just keep driving the prices higher? Can't they just keep doing that in the name of supporting their operations?
How far can they kick the
It's a great question. I don't know, but
like the guy on Long Wave, and I forgot his name.
Barbudo.
Joseph Barbudo.
Yeah.
So he thinks that it's going to be a huge crash and all this stuff, but I disagree. I think it's more likely to be what Lynn Alden says, which is like the nominal gains but the real losses. But the question is how far can the government of Canada kick it down the road? Well, I would say that they are the best at kicking it down the road right now. They have the highest bubble.
Great leg.
So they are, like, we may say that Trudeau is not an effective prime minister, but he is effective at creating a bubble. And so I think that he'll be able to continue doing it, but maybe not at the same pace. But either way, what Canadians should realize is how much of my net worth is in this complex system that might be pushing the limits, and where can I get diversification? And if you're not going to get it from Bitcoin, you probably should get it from US investments, and USD, where it's going to be, not every normie is going to be able to go and buy Bitcoin after watching the interview. But
sure.
So if you're not comfortable with that, maybe just hold a little more S&P 500 or a little bit more USD to try and, sidestep the problem.
Having said that, Bitcoin is disconnected from these numbers.
Yeah.
In that Bitcoin, when the price of Bitcoin goes up, because of the charts we've shown with the value of real estate relative to incomes and S&P 500 requiring more earnings to justify the price, when Bitcoin goes up, I would say normies get very uncomfortable that it's going to immediately correct, right? Like it has to come back down. But the price of Bitcoin has nothing to do with the supply, right? The supply is fixed in the code. That's not changing. So if you put in the Veblen effect or
tell people what that is.
The Veblen effect is like buying like a Rolex watch, paying more for a Rolex, even though it essentially does the same thing as like a, I don't know, watch. What's another?
Timex.
Like a Timex.
Go way down.
You've got a Rolex. Like, does the watch have more features? It's like, well, no, it's a Rolex. So because it costs more money, the Veblen effect means that watch is essentially has more value because it's
a signal.
It's a status symbol essentially.
Okay, I like that.
But for Bitcoin, when the price goes up, nothing changes on the back end of the code. So when the price goes up, it doesn't require a pullback, and people taking profits, there's nothing, take profits to where, like, it's not going to slingshot back down. I mean, historically it has, so that is probably going to get radioed or podcast, but there, from a fundamental standpoint, like, nothing from the back end changes when the price goes up.
What I would say with Bitcoin is the scarcity that you're describing, it's fixed in the code, where in real estate, they manufacture the scarcity.
Yeah.
I'll give you an example. Like when you look at Vancouver or the GTA and you wonder why those areas have outperformed the other areas, is because they've created the scarcity. So like if you look at the GTA, you've got Lake Ontario at the bottom, and then you've got the green belt that keeps like a pressure cooking system on the core. And that's why the core does well, because they've legislated the scarcity into it, or they create the scarcity by increasing immigration, but doubling development charges so that nothing gets built, or whatever is the trick. But the government will tell you, hey, we want more supply. And then everything that they do restricts supply. And so that's how they keep their bubble going. But, the problem is the youth are upset about this.
Oh, big time.
Yeah. And so there's only a matter of time before the youth are going to attack this artificial scarcity. But I'm not worried about the youth, increasing the supply of Bitcoin to 42 million. But I don't know how long the system can maintain itself. So you shouldn't be speculating with your extra energy in real estate. You should just be using what you need. Use your house, use your office, use your cottage if you have a cottage, whatever, but don't take too much extra.
The other thing is, because real estate has increased over inflation, first-time home buyers and people entering the system are getting further behind. And Taylor and I have seen that firsthand. Like, we've seen first-time home buyers try to purchase a place, and then they say they wait a year. Now they can't even, they're further
They can't qualify.
They can't qualify.
It's so true. I know.
And then what's the alternative? The rents are, through the roof, right? Especially with a new place. If you're just entering the market, the people entering the rental rates are the highest they've ever been. The people who have have been in a place for a few years because the rent controls. When we're going to get to that in a second. But
I like this. This is the thing that I shouldn't say I like it, but I've somewhat enjoyed watching a lot of people who traditionally vote a certain way, younger people, come to the realization that savings are no longer a thing that they can do to get ahead. That's really like a mind-numbing realization. If you're someone who's in their 20s, even early 30s, right? Like, I'm 36. I think I bought my first house when I was like 28, maybe. And at that time,
you could.
My wife and I were just saving money. I wasn't even like investing. We were just saving cash. There's no problem. Like, and then before you know it, you got enough for down payment and off you go. And like now, I look at some of these, programs coming out to quote unquote support people who are looking for houses, like this first time home buyers savings account thing. The problem is not that I'm not getting tax breaks, my friend. The problem is that I have no money to put in the account. And like, I just don't understand how anyone can look at this and not panic.
Savings at the same rate.
There's no chance. There's no chance.
Not only can you not grow your savings, but it's getting harder and harder to keep up with inflation through traditional investment rails in the financial system. So
for sure.
Like, how much effort do you have to put to study the S&P to maintain a return above inflation?
Yeah.
Right? And the inflation rate is not what the CPI says. I've written about that before, but it's not.
let's see. What is your next slide here? It is hash rate has increased 500% since some unknown number. This, I got to tell you, the aspect ratio on this is like, I don't know. This is my first time sharing slides in person, so
it's fine.
Good.
All this is trying to talk about is, again, going back to your price to earnings. So Bitcoin doesn't have earnings, but it has hash rate, and the hash rate is describing people putting in economic energy into the protocol and using the protocol. So it's like the utility of Bitcoin, right? And Max Kaiser is saying, always watch the hash. The hash leads the way. And we look at this chart, and obviously they're not on the same scale. Like, one is a hash rate, one is USD. Right. But when we look at where the hash rate is now, it's way above the price, and it's growing quickly. If we were talking about real estate, that's like almost if the rents were just skyrocketing, right? So the utility is going up huge. We look before the COVID bubble, and the hash rate is above the price, and then we get a huge spike in Bitcoin, right? Then Bitcoin crashes with the FTX. And right when we're at that bottom in Bitcoin, look at the gap between the price and the hash there as well. Yeah. So when you have a big gap between price and hash, it's a signal that this is the time to be purchasing. And I look at it now and I'm like, wow, that is a hot chart, because that hash is just moving and the price is moving, but it can't even catch it. And so to me, I like a situation where the fundamentals and the utility is increasing in the asset class rather than you're pushing out that last kilometer out of your empty tank.
Sure.
This is just like starting the road trip.
Why do you guys like this chart? I mean, I won't speak for you, Drew, but like, what I assume you like this chart too, since you both
I
have
hate this chart.
You hate it?
No, I like this chart.
I'm curious as to why you think hash is utility better than, like, I don't know, transactions or transaction volume or USD transacted. I know, like, I kind of get why this fits, but I wonder if there's stuff that fits better.
I would say hash is like one of maybe 12 or 14 indicators. I look at, hash. I look at the amount of people that have any Bitcoin, the amount of people that have 0.1, like any number, and all those charts are like up and to the right. So
I like the hash because it's integrating into the
adoption.
energy grid,
it's a real-time
and it's measuring how much of the world's energy grid is in Bitcoin, and is it increasing? And so for that blue line to go up, more and more people are investing capital and labor and buildings and equipment.
Sure.
And more companies are getting involved. So it's really a good indicator of adoption.
Price is a lagging indicator to hash, I would say.
That's for sure.
And the one thing that's interesting, like if you zoom in just above 2022, just to the left of there, if you see the blue, there's like a sharp drawdown at the time, and the price of Bitcoin was almost 60K. That's the China ban. That is 50% of the hash getting shut down in the biggest country.
And it pulls the price down, and then the hash recovers and the price goes back up.
Yeah.
The hash is 5x.
That's what caused this.
Do you think that's related to, like, are those news events or are those hash rate events as far as the price spike? I mean, you guys will report to me that this is a hash rate price event. I've not heard people talk about hash rate price events before.
Yeah, so I think the hash rate is what, like, I wake up and I check the hash.
Okay.
Yeah, if someone says the price or Bitcoin has crashed, or there's two things I would check. One is the hash, and two is like, are there blocks every 10 minutes? And if there are, then you just go back to bed, because that person doesn't have a fundamental understanding of what they're talking about. But the main thing about this chart is when Bitcoin could support 50K Bitcoin at a hash that was 10-20% what it is now.
Yeah, significantly lower.
So
it's done it, in fact.
If it could, what is the price of Bitcoin when the hash is
great?
Gone up 500?
Well, great question. What is it? I don't know.
The other thing we can look at this is that when I started in Bitcoin in 2020, the hash was 100. Okay. Now the hash is above 500.
Yeah.
So it's 500% in 3 years, or 4 years now. Nothing else is growing fundamentally at that pace, which is why, again, the Bitcoin car is just starting up and getting on the road trip, where the real estate's been driving around and we're almost at the end of the tank. And so I think hash rate is really important because it's telling us who is using the protocol. Is the protocol being used? Is there resources in the planet being dedicated to it? And I love it.
I have no argument against that. I wonder, like, I do wonder how much of this is, like, there's tons of miners out there. They go online, they go offline. I want to see what happens after the halving. I want to see what happens after the next big price acceleration. Like, the competition drives hash rate, power prices drive hash rate. And for the most part here, those 4-year halving cycles have not, it's hard for me to even see them in here, right?
Don't forget about productivity. As they increase the quality of the equipment.
Yeah, the hardware gets better.
The utility is also measuring the productivity of the energy grid.
The difficulty adjustment is designed for that to entrench itself further into the financial rails. So yes, there's more people. It gets harder. Like it's designed to be a slow spread into the financial rail system. So you can see, like, what I see is like an exponential adoption.
Sure. Yeah. It's hard to argue against
up markets, down markets. There are small spikes where it corrects, right? When the hash goes down, the difficulty gets easier, and more miners are incentivized to come back in. It also is a system that has, like, when was the last time the real estate market has had a massive correction in Ontario? Like it
has, I mean, 15, 20 years at least. Yeah.
But what was
there was no correction in 08.
Like, it was very minor.
Yeah. I mean, we just had a 20% in some
Bitcoin
parts of the
draw
GTA.
down to from its peak from 60, like a 75,
ish.
drawdown. So Bitcoin gets attacked. It has these massive corrections which flush out all the inefficient capital every like 4 years. So people say that volatility is like a bug. I say like this is a system that like
Cleaning.
has been hardened.
You would never take that view in real estate. You know, I see every single TikTok realtor telling me that I have to buy now because this 10% drop is the last 10% drop.
But all the leverage. So when Bitcoin gets flushed out, right, 80%,
Yeah.
anybody who's at 100 to 1x leverage.
No, I'm agreeing with you,
or
Drew,
even
for sure.
even 2 to 1 leverage gets flushed out, right?
Yeah.
Like, and what's left is people
And
who
if
own
you
the
don't
other.
have that cleaning protocol, you end up with a huge disconnect between price and utility.
For sure.
So every bug that I hear, like, oh, it's volatile, is actually a feature, right?
Everything
And
else is volatile too. Real estate
Yeah.
is volatile.
And
S&P is volatile.
Bitcoin offers you the best risk return according to the Sharpe ratio, according to Fidelity. So the volatility is an opportunity, not a problem.
Real estate, the irony is far more levered than Bitcoin.
Oh,
like,
yeah. Not even close, right? I mean, what is the number of dollars here in Canada that are up for renewal this year, next year? Is it 46 billion, something like that?
It's a lot.
It's not a huge number, right? It'd be higher than that. I've heard so many numbers in the last like 2 years that they're all kind of melding into my mind together. Okay, so this is the complex real estate system. So you got some good graphics here.
So we've talked.
That's
about
an
it a few
AI one for
times.
sure on the bottom right.
Yeah,
100%. You got that.
AI
You got that from Bing for sure.
Yeah.
This one on the top right looks like
That's a political card.
Yeah. Okay. Yeah.
So we talked about this a little bit.
We're hip, right? Like we know the internet.
Very hip.
You go to buy real estate, and what do? So you buy this townhouse, and then your name gets to go on the title, and it's supposed to go on the land registry, and it says, "Hey, Taylor Sugar owns this townhouse, and all the rights of that townhouse should go to Taylor Sugar."
Mm-hmm.
But in reality, what happens is you buy it, and then you join that complex system. And again, it depends. What is your municipal government? What's your provincial? What's your federal government?
God.
Okay. And then all of these things can affect that liquid. You pour your economic liquid into the house, and then all of these things can affect you, whether it's the government, lenders, environmental regulations, land transfer tax, property taxes, development charges, rent controls, NIMBYs. You can get a bad neighbor that just runs a junker beside you, and that can affect your economic energy.
For sure.
Right.
For sure.
And so there's so many different things in the complex system where you could end up losing purchasing power, that's where the risk is. It's in counterparties, regulations, external forces, and taxation. And we talk about, like, it's kind of ridiculous. Like when we talk about the recent things, like with Doug Ford and the Greenbelt. So like, imagine that you own this 100 acres, and then all of a sudden in the early 90s, the government says, too bad, you don't get to use it anymore. So instantly your economic value is like a fraction of what it was, your purchasing power. Then you're sad about it. You wait 20 years. The new guy comes in, Doug Ford. He's like, guess what? We're making your land good again. You think you're rich. 3 months later, there's a corruption probe and they flip you back. And so at the end of the day, the value in your real estate is subject to the politician of the day.
Not only like on this list, there's about 20 things. These are all points of failure that you don't have control over.
Yeah.
And they're not tied to the fundamentals. They're external things.
These are rather whimsical, honestly. Like whatever the sort of mood of the day is,
they're not equitable.
No.
So if Taylor wants to get into land development, he's not going to Doug Ford and saying like, yeah, my property should be included.
And there was no process to determine what were the best properties that they should take out.
Yeah.
Not a fair equality, not looking at utility. It was just based on who brought the biggest envelope at his daughter's wedding, And so like,
I'm
if you're the landowner,
I'm Italian. The busta matters a lot. Okay. If you don't get a good busta, you don't get to develop. This is a fact of the matter.
And we look at Airbnbs next, right? So let's say you worked hard, you bought your 5 Airbnbs, you set it all up, you've been running it, you're working hard every day, you're making money.
Mm-hmm.
All of a sudden, the government says, you know what? We're not going to let you deduct expenses, which is another way of saying, insane. Hey, we're just going to rip the taxes up on you.
So that just happened. You should explain to people this is not hypothetical. These are
real examples from this last year.
Yeah.
And but think about that person who's running the 5 Airbnbs, they have this complex system. They make revenue, they minus expenses, they get profits. All of a sudden, they don't get to minus expenses. So their tax rate goes up to like 70 or 80%. And why is the government doing that? Because they're pushing the landlord out of the short-term rental, which gives them pricing power to reset the rent every day on Airbnb, and pushing them into the long term so that they can steal the economic value through the rent control suppression. And
certain municipalities are trying to put that into their zoning bylaws too.
Talk to me about it.
That it's a use issue. Airbnb is a use issue. You're a hotel.
Yeah.
You can't have hotels in stable residential.
I have a big time problem with that. And I have a big time problem with guys like Floyd Marinescu, who's the UBI / land value tax proponent here in Ontario. Or, maybe he's nationwide. I don't know. You guys heard of this fella?
No.
I have not.
I highly recommend listening to him on Rockstar Real Estate's podcast, Your Life, Your Terms. Make sure you have a stress ball, or like you're in a, anger room or something with some pads and a bat. But, you hear this more and more, and I kind of want to get into this with you guys because I think you have a good handle on where this might go. I'm worried as like even a guy who just owns a primary residence, and you guys told me before the show, you guys only own primary residences and useful real estate to you, right? Things you actually use and consume value from. I'm worried that as we continue to add more, this is like, maybe inflammatory language, but as we continue to add more have-nots to the pile of people who vote and influence policy and, run for public office, do we not run the risk of even the primary residence becoming a thing that is targeted by governments? I say this listening to Floyd because he's talking about, making sure that we're paying the land value tax on a property that you own. I don't like that much, but I kind of understand the merit. I really get pissed though when I hear Floyd say something like boomers and retirees should be forced through different provincial programs and negative incentives to quote unquote not downsize but right size. This language that someone else can tell you how big your home should be and how big your living space should be, even though we saw on the few of the charts before that really a lot of people are not real estate investors. They have become forced real estate investors through other debasement problems in their own home. They're going to be told they have to go down with the ship now. And I see some of these things here. These are all things that whether they're internal or external, obviously they're all external. I think we all agree on that. They're not only things you can't influence, but they're things that are actively, I think, gaining steam thanks to demographic changes that are happening in the province, right? I don't see how this goes any other way.
You say, are you worried they're going to target the primaries? All this stuff already targets the primaries. So like,
yeah,
them raising the property taxes across the board
Toronto
at 10% and running rent control at 1.8%. That's like saying, hey, the government landlord gets this rate of increasing their rent, and it's way higher than CPI. Then the private landlord gets this rate of increasing their rent, and it's way below CPI.
Mm-hmm.
So obviously the complex system is corrupt. The question is it going to continue to outperform? And I don't know.
The other thing is when you have to be close to the policymakers to maintain your interest in this system, there's GDP that's being deployed for your personal interests, and my interests might not align with Taylor's interests, like where my property is. And that very definition is called crony capitalism.
Yeah.
Imagine having a portfolio of properties and trying to, in different areas, different cities, different provinces, and trying to monitor all of these things for all the locations. And that's what I'm talking about with the risk is like real estate's a lot of work. Like if you want to make money in real estate, there's a big skill factor in it. But let's talk about the young guy who's 20, just finished school. He's working at McDonald's. Okay. How can that guy make money in real estate? It's pretty hard. Maybe he could buy some REIT shares for $10 a piece and do it. But you know what he can do is he can come home every paycheck and put 5% in Bitcoin.
Yeah.
And 10 years from now, he's going to grow that purchasing power. But it's not as simple in real estate. And so that's part of the beauty is that the Bitcoin is scalable and it provides equality and opportunity for all demographics, all people.
Anybody can strap in. And the Bitcoin system has none of these points of failure.
None. Yeah.
I'm not saying that the Bitcoin system doesn't have a point of failure, but
I just think stuff like this is lost on a lot of people. And when people say that they don't have any opinion, they're apathetic on the ETF approvals, I look at stuff like charts like this, and I say to myself, there's an entire sort of tranche of wealth that would never go to bull Bitcoin at the post office with their QR code and buy for cold storage. They'll never do it. But they understand that there's risks here that weren't here 10 years ago, and they want something that's more conservative. Bitcoin is the more conservative approach to wealth preservation than this. This, by the way, you guys mentioned there's 20 something things here. I can think of a few that are not on this list and things that are coming down the pipeline too, it's going to get worse and worse. Even if you only own one or two properties, there's just no way you have the expertise. And then you wind up in the same position you are when you're an S&P investor, or you need a money manager. You got to work for the money and then pay someone else to preserve the money for you. And then on the back end, pay someone else to make sure you don't pay taxes on the money you preserve. Like it's truly an insane
that's part
system.
Of the reason why we have businesses though, is that we've spent 20 years studying real estate. So people hire us to benefit from our knowledge to try and navigate this. But the challenge is that, the music has been playing for a long time.
Mm-hmm.
Do you know what Taylor and I call this system?
No.
Leaky capital.
I like that.
There are a lot of holes where your
And that's
wealth
why
gets
it's a
drained.
dotted line, right? You put your water in it, and then you don't know how it's leaking out.
Everyone is coming for something, right? And
I
it's
think,
just
each one of these sort of systems, they're all coming, like land transfer tax. Oh, there's now you have 10% less. There.
yeah.
Oh, now
Toronto, especially, right? The
that
Toronto.
just happened last month.
Or you buy a perfect parcel. It's zoned appropriately. You build what the city needs the most in that spot, but then all the NIMBYs come out and stop you.
Yeah.
And so these people that don't have any economic interest in the property take away your property right. Or you build a deck and the contractor screws you and puts a lien on the house. All of a sudden, the ownership of your largest asset is now at risk.
It's in jeopardy.
And they don't have that in Bitcoin. So
you're starting to see in the province, I won't give too many details because I don't want to, spill the beans, but in the Hamilton area, there's a couple of really nice parcels of land that would make for great large luxury homes. I'm talking 5,000 square foot homes. They would sell right away. They're away from everything, including, by the way, things like welfare services, schools, educational stuff, other social services that people who would typically need to live in low income, high density, like New Canadians, for example, would need. And the city applying their broad brush as broadly and incompetently as possible in this case are basically saying to landowners, you can't build single family dwellings here. You have to build high density, even though there's no way that anyone who needs high density and the services that typically you see in proximity to high density would ever be living out there. There's just no way, but they don't care. And it's, again, you're at the mercy of kind of like, I don't know, what's the best way to put it? The NIMBYs are, I think, a close kin to this type of person, like the sort of uninvolved, unengaged municipal public servant who's like, I don't know.
I know that's giving you their
it's a scapegoat. It's a scapegoat, right? Yeah.
There's a provincial-wide planning document called the Growth Plan for the Greater Golden Horseshoe that restricts infill to less than 50%.
Oh, come on. That's insane. That is insane. And they see the problems too, by the way, of these cities where like everyone is in these huge high density areas. We talked about Toronto before we started recording. When you add nothing but high density, what do you get? You get a whole other swath of problems that are maybe harder to solve than this.
I think it's actually 60% now have to be infill. 40% can be greenfield. Greenfield is when you basically take a farmland and put detached.
Right.
And even those greenfields have minimum density requirements that have essentially doubled in the last 5 years.
That's incredible.
The amount of detached home, which seems to be what everybody wants, is being policied out.
Manufactured scarcity.
Yeah.
And everything is being directed to MTSAs, essentially. They're called major transit station areas. So anything by go. And logically that makes sense. But what you're doing is putting high density in areas that like or only have a handful of owners and essentially saying like everyone lives in a 3-bedroom condo.
Does this not crush? I mean, we hear all the time that immigration is so high because we suck at family formation here in Canada. Does this not continue to apply downward pressure to family formation and birth rates? If you force everyone to live in the, sort of vertical shoebox setup?
I don't see how it doesn't.
I don't get this. Like this, I was hoping not to get mad today because like I do have to go back to work after we're done here. But like now I'm pissed because I look at this stuff and we're shooting the shit here talking about all the problems with real estate and there's so much going on that's adjacent and second order to real estate policy and development policy and housing policy. They just either don't seem to care or are so incompetent that they're missing the forest for the trees. And they're fixing the problems in ways that create more issues than solutions over and over and over again. It's infuriating. I don't know how you guys work with this every day. This would drive me fucking batty.
Well, we real estate by day, Bitcoin by night.
I guess
that's how you blow off the steam.
Brick in the streets, bit in the sheets. Is that what they say? Okay.
I love that.
Okay. So here we go. Next slide. Market rents versus CPI versus Ontario. Oh, great. This is a great chart.
For some reason, it's missing.
Is it the next slide?
Go back. Maybe.
Can I shrink this? Maybe
it's like
hold on. Let's see.
Rent control one. Maybe
let's see if I if I come out of this thing.
We worked.
If I go to this.
Yeah, I don't know why it's not showing.
I don't know. So
maybe see if you can move this off.
Oh, there it is. Okay, so which chart do you want to see first?
Just delete it. I can.
Let me delete this one.
Delete the blue one.
Okay. Delete.
So
editing on the fly.
I started working on this as I realized what was happening, and so I thought I needed to like get the data and use the government's data so I can visually show people what I'm talking about. And so this is going 10 years, 2013 to 2023. And we've got the black line, which is the rent control. So the government sets that rent control every year saying how much can landlords increase the rents on existing tenants. And then you have the red line, which is CPI. And the idea with the policy is the rent control should be close. It should dance. It should be like a ballroom dance with the CPI. And you can see the black and the red. Sometimes they're a little bit far from each other in the beginning, but they find each other. Okay. And the market rent is the green. And so the CPI is a lie, and everyone knows the CPI is a lie, and it's far below the market, but that's the game that they created. So we're working in their game, but the problem happens in 2020. And that blue line is saying, hey, that's when the central bank, pushed up the balance sheet like crazy and debased the currency. And what happened is the market rent went crazy, the green went up, and the CPI went up a lot. And even though it's still fake, but the rent control was suppressed. And look how far the ballroom dancers were. That's
crazy. Yeah.
And so not normally when the space between the green and the red, that's the normal amount the government screws you. And then when we go over here, the space between the green and the red is still there, but now they've added the space between the red and the black.
Yeah.
So
Eiffel Tower now with the government. Yeah.
And what this means is one, tenants are getting more of the pricing power of real estate than landlords, and the government is redistributing that pricing power. And two, when you have a debasement shock, like when the government prints a ton of money, it decreases the landlord's pricing power. So as we go forward over the next 10 years, if we have more events where the government has to print a ton, what happens is the government doesn't want to push that instability on themselves by angering the tenants. And so they protect the tenants, and they push the inflation onto the landlord. And if you go to the next slide,
the greedy landlord.
Well, sorry, before we go there, I just want to say one thing. That blue chart, maybe we'll put these in the notes or something later. That increased 500% in 2020. So you can see the gap.
I was wrong. The hash rate increased 500%, but so did the central bank balance sheet.
I can go back. If you're on audio, I can go. This is the other chart here that we were talking about. That's related to the chart we just saw. It
just shows you where the change happened.
Okay.
Right?
Yeah.
And, I think everyone knows that's when it happened anyways.
It's all good. We
had it transparent, but it doesn't matter.
Whatever.
If you go to the next one, though, go to the next slide.
Yeah. So this is the next one showing like the conflict that the decrease of purchasing power is causing,
and also how to calculate it. So let's say that we don't want to just pick 1 year because we could have an outlier year like COVID or whatever. Let's say we pick 5-year periods. So we look at 2013 to 2018. And then we take the average rent control for that 5-year period, which is 1.58%. So that means that landlords could increase their rent by 1.58% a year in that 2013 to 2018 period. And the market rent went up on average 4.15%. So if you take the rent control average, divide by the market rent, it tells you how much percentage of the pricing power does a landlord receive. So back then, it was already a pretty messed up system.
Still shitty, yeah.
The landlord got 38%. So it wasn't that good.
But the risk, how much of the risk does the landlord take again? 100%.
Yes, 100%.
And what about in the second chart here? Also 100%. Okay.
So then we go to now, 2019 to 2023. And it gets a little, this is like, when I understood this is what made me really doubt the viability of rental properties in a rent control system, which Ontario is. So we have 1.1%. So the landlords are allowed to increase by 1.1% a year. Let's talk about the monetary inflation. So Saylor says 8%. So landlords are losing 7% just on that. But then the market rent went up 7% a year. So now they're only getting 15% of pricing power. So that means that tenants are getting 85% of the pricing power of the property that they don't own, and the landlord's getting 15 if they stay.
If they stayed, then So right. But what that's done is like it's caused an issue. It's pitting landlords against tenants, right? Because the landlord's saying like, I don't want this bill that the government and the tenant's saying, I don't want it either. Like I should have rights to stay here. So what you're seeing is two things. Like one, you're seeing a 52.8% increase in issues at the landlord and tenant board from March of 2021
That's
to March
so
of 2023.
high.
So
what is the wait right now at LTB? Do you know?
6 months at least.
I think there are 50,000 cases.
Oh my god!
Something about.
Oh my god!
But that's an example of the system breaking, right? Yeah. Like the system that they created has broken, and we're seeing the cracks. And the landlords and tenants are fighting the fight. They don't realize that it's the government that has created the inflation.
Well, and I don't like that. first of all, the tenants aren't at fault here, right? Like they want to just live somewhere with stable income. And the landlords aren't at fault. They want to live somewhere where they don't get totally blown out on their investment because they're taking all the risk. And both are getting blown out. If you're a tenant, you want to stay in your place as long as possible for as long as you can. And what the landlords are saying, and this happened, we saw in the GTA in July, interest rates was it June? I think interest rates increased in June. You saw all of a sudden a massive increase in rental properties that hit the market because the landlords are saying,
speculation and
well, and the landlords are saying, check, please. They're
Yeah.
saying like, I don't want to fight the tenant. Like I have a job. Most landlords.
I was okay with 38, but I can't survive.
Yeah, I can't
on
do 15. Yeah, I can't do 15.
15 is a lot of decreased purchasing power, right?
Yeah.
So and you know the problem at 38, it's okay, right? Because your investment's gone up. So okay, maybe I lost a bit of purchasing power, but my investment's up.
This is also nominal gains, but real losses. It's the same concept.
Maintaining 15% purchasing power does not work in a flat real estate environment,
Right.
let alone an environment that's increasing. If it's flat or decreasing, you're
really cooked.
You're cooked, right?
And
Your
maintenance is going up. Your utilities are going up. Your taxes are going up.
Everything. Yeah. Everything's
and
going up.
you get 1% increase on your rent.
You
have to pay double-digit increases on all your expenses.
You're getting squeezed, right? And
you're getting squeezed. Any new person entering the rental market's getting squeezed, and the old people are being incentivized by the landlords to just sell their property because they can't evict them, and you know you just want to get rid of it, right? Like this is an asset that has done really well for me that is suddenly like not only not making money but like losing money. Why, for someone who's took the risk, why am I the one who's left with the
you shouldn't be. And you know, you guys talked about this too, and I've said this on the show before. I've talked about it with other guys who are real estate focused. The problem is that there's this now sort of fake dichotomy between landlord and tenant, when really the dichotomy should be between people trying to survive debasement and the party causing the debasement. And, you know, one is government, one is, you know, everyone else. It kind of sucks, right? Because you're really causing rifts in society this way. And when you have 15% pricing power and you have this rental control issue, what are you going to see? You're going to see, at the very least, sort of like the most generous interpretation of events would be that the quality of rental units goes down. People are more stressed out because they're more likely to have problems like bugs or power issues or water issues that don't get fixed. They go unrepaired for longer periods of time because the landlord doesn't have the power to do it or the money to do it. You just cause so many, again, second order problems. There's no thought about second order problems. Not at all. Not at all.
An efficient system for GDP either, right? Like people are being sucked into this conflict where they should be focusing, you know, on other things in life.
Yeah.
You shouldn't have to worry about our 5-year mortgage renewals and our rent. Like all these things that just distract people from actually producing.
Why don't we do longer lock-ins?
It's because the government doesn't have the credit to borrow at that length. So the U.S. government has better credit, so they can borrow at 30 years. Although that credit is starting to be questionable. But I think that they should legislate that. They should say mortgages should be a minimum of 10 years.
U.S. credit recently was downgraded.
Yeah, of course.
Friday afternoon.
Yeah. So I don't know.
Not news you don't want to put out on Monday.
Why don't we switch to Bitcoin? That's the next one for you.
Happy to. Yeah. Okay. Not your keys, not your coins.
Okay. So
here we are.
So this slide. So
I'm going back to we got to make this thing fit.
Okay.
Does this work? How do we fit this?
You
I don't
could
know.
like shrink it.
It's okay. It's fine.
This is great content.
Oh no, good for the audio crowd. I don't know. You guys talk.
It's fine.
We'll figure it out. Everyone knows what stats are.
So we showed sort of the property rights tree on the real estate side, right? There are 25 things of which none of them you have control. On the Bitcoin side, you can plug into the system and there are no very little points of failure, right? Like you don't have to lobby your government. You don't have to hire someone who knows about real estate to tell you where the best place is and the best part.
Which SAT is the best?
Yeah.
Which SAT?
Some people want to talk about that.
Well, I mean, there's ESG SAT, right? Certain Canadian dragons. But so this system, basically anyone in the Bitcoin system, anyone can strap in, right? These are rules without rulers. It doesn't require any amount of capital. There's no leverage required to even get in the system. In the real estate system, in addition to like having all of those points of failure, you have to either have a large chunk of upfront money and the capital backing to get a mortgage, right? In Bitcoin, you don't need any of that. You can put $5 in Bitcoin. And this, to me, is a system for first-time home buyers. Like Taylor and I have seen a lot of first-time home buyers get priced out of the market. And I don't think that that's something that G7 countries should experience, like people not being able to afford property.
Especially if they're saving and at a good rate.
Yeah.
You know?
It's not being able to afford their home.
So the real estate system, it's leaky storage, right? Like the interest rates have gone up. Oh, your value is down because the interest rates are up. So well, I don't have any control over that. Oh, your utilities are up because inflation's up. Oh, you have to pay, someone to find the right place. The commission rates in Bitcoin are small to get in through a trading, buying it through a company. They're very small.
There's no hurdle. Yeah.
There's very little hurdle. I mean, there is some leak, but what's it, 1% now?
Max.
Cheaper in others. Like to unload your money to an exchange is nothing in most now in Canada. And then there's like a 1% fee. And then if you're going to put in a cold storage, there's another fee there. But
sure.
Let's say conservatively 2%
on the one. It's 1.25 maybe
on the one transaction you do, right?
Yeah.
And the one thing that really hit home to Taylor and I about Bitcoin is that's a one-time 1% fee, and you don't have to require any knowledge or any maintenance to maintain that purchasing power. You buy it and you go to sleep, or in Taylor's case, you go back to Disney.
That's right. Yeah.
So that's the biggest thing. Like there's minimal effort to plug into this system. In the real estate system, there, in addition to like all of those points of failure, the leverage, it's very difficult to get your liquidity out of the system, especially in a declining market. In a declining market, which we saw in COVID,
and in 2018.
And in 2018, and before that, 2008.
8, 9, yeah.
People were just walking away from properties that they didn't want to take a loss on, right? If you bought a property in 3 months, it went down 10%, you just take the deposit loss, which is frankly going to get you into court now. But the person selling it, in Bitcoin, if I'm going to sell my sats, which frankly, I didn't know there was a sell, because sell it for what, right? Like,
yeah, where are you going to put that capital? It's going to outperform.
Well, if your time horizon is more than 4 years, like no one has ever lost a sat in Bitcoin relative to fiat. So the main argument is like, okay, well, I want to trade this for more dollars. And once you get off of that argument and say like, okay, you're on a new monetary system, you're not going back. Once you do that, you sort of realize like, okay, this system requires like, well, it's quality for everyone.
Yep.
So anybody, regardless of your position, can enter it. So the barrier to entry is essentially nil. You can put
each sat has equal rights.
Equal rights. And my residential real estate doesn't have equal rights to someone who's like a heavily invested
for sure
and is lobbying the government.
Yeah, if you weren't at the wedding, you don't get the same rights, right?
Yeah,
well,
exactly.
We weren't.
It's true though that, and the other thing that about sats being equal rights is everything that's good for your sats is good for other people's sats, and the same thing is true on the downside.
It's cooperative,
yeah,
right? And in the counterparties in real estate, they're all like vultures looking to suck your energy, but the counterparties in Bitcoin are the nodes and the miners who are protecting you, and protecting the protocol and enforcing it. And so in the Bitcoin system, you're protected, but in real estate, you're not.
Or even in stocks, how does a politician that makes 300, 400,000 have a net worth of $70 million?
Yeah, good question.
And not by Bitcoin.
Well, they have they're closer to the information source, right?
Yeah.
You can be anywhere. There's no information source for Bitcoin.
No.
You can read the white paper.
There's no insider trading going on early information like you mentioned there. There's clearly, one of the things that drives me the most crazy about elected officials, I don't know if it's as bad here as it is in the States. I don't think a lot of people are getting rich on the TSX, but in the States, you see these major gains against the stock market, crushing the S&P better than any hedge fund manager has ever done year in, year out from elected officials.
Mm-hmm.
I mean, this is insider trading. I don't know why we're pretending it's anything else, but
that's exactly what it is.
Of course.
And I don't know why they're excluded.
No one says anything about it. Pelosi gets up there, she's a ghoulish looking 85-year-old woman. I don't want to stop insider trading. We'll just pass away then. Like, what? I mean, there's nothing else we can do here besides wait for these guys to die, which is frustrating and sort of somber, but
Apple has a term on when you can stay on the board. I think it's Al Gore is just getting off.
The board.
Yeah. Apparently that doesn't transfer into politics.
This is the state of affairs basically for any governing body. Like, I'm on a board. We have to renew or revote for membership every 4 years or 6 years. I forget. You do this for a number of reasons. One, because hopefully people find themselves with better stuff to do, and they've kind of given the resources and expertise they've had over that period of time. Should see that in politics too. But the other reason is because if you let someone stay, you get corruption. This happens in every facet of life where you can stay forever. You get people who are corrupt after a certain period of time. We just pretend it doesn't happen in politics for whatever reason, and we're paying the price for it now.
Bitcoin is the most equal system I've come across.
You also get absolute property rights in that if you own the key,
Yeah.
if you have control of the key, all the sats assigned to that key, they're in your absolute control, and no one in the system, no counterparty, no judge, no politician, no Doug Ford,
Can't force
no
you.
Vladimir Putin, doesn't matter, can't change it. And that's where the beauty is. Whereas when I buy that townhouse, my property rights are diluted from the very beginning. And I'm giving 85% of my property rights for pricing power to the tenants, and I'm giving to the NIMBYs, and I'm giving to the banks and the government and all this stuff. And you know what? I just like the simplicity of absolute property rights. Like if I want to own $1 billion of something, you can own $1 billion sats and control them. And I don't think there's many things where you can have that and have the guarantee of the network protecting you and the hash rate protecting you. And even if China tries to ban you, you're good to go. So,
you also can't take say you move to a different country, a different province, as the top book there alludes to, you can't take your townhouse with you.
Yeah.
So when you try to move, your townhouse is going to lose capital through some of the other points.
It's not divisible either, right? Like you can borrow against it, but can you chop up and sell off a window? Or, you can't.
I have got a great Dutch system for my house.
So let me sell you this. Let me sell you my kitchen, right? It's funny. IKEA kitchens are like the most, easily sort of chop upable part of a townhouse or a house these days. The jurisdictional transportability of Bitcoin is one that I think about a lot. And, not to rehash here or like beat a dead dog, but the COVID dead horse.
Haven't heard that analogy.
My bad.
I like it.
I was going to say wake a sleeping dog, and then I got confused there. But anyway, so the COVID thing woke up a lot of people. Now you have these sort of digital nomads who are, our age and younger, let's say, who are not tied to a desk or not tied to an employer, and they don't want to be tied to a monetary system either. I think that a lot of people are going to start looking at this as we kind of get into this era where kids now, let's say the under 18 crowd, they don't have the same hurdles or requirements as far as like home ownership. What the government has done indirectly here is, through their pricing people out of home ownership, they're forcing people into Bitcoin, into these nomad situations where they're going to be much more likely to use that asset than they are to use homes or S&P 500 indexes or whatever. Second order effects, sometimes negative. Here they're positive, but in both cases, not considered, I'm sure, by people who are setting policy. So I'm interested in seeing how that turns out too. Should we move on here?
Can you imagine that people believe that believe Bitcoin is more volatile after looking at all of these different things? But that is the beauty of Bitcoin. That's the opportunity where the whole market has not digested the real risk. And as we go through this next decade of inflation and volatility and war, I think we're going to see where risk really is. And I think that people, like how you used to use bonds to be risk-free, and now they're super risky. It's like the boomer irony. Bitcoin's going to replace bonds.
It's true. And I think the other thing that people can, like, this is a sort of old way of thinking, but I think it looms large today. People look at real estate and they think, cannot get it, so I want it and it's desirable. They look at Bitcoin and they think, I can get this, so I can get this anytime. I'm going to save for the real estate or do something to get the real estate instead. They don't consider that, like, it's not necessarily an either or. In fact, it is one is a means to the next should you want it down the road. But no one thinks this way. And now, I hope kind of with the ETF that people are hearing this from their financial people, from their parents. I doubt it, but maybe, who knows? And like, you see this become more and more mainstream. My concern, going forward, is that it's going to be too much Bitcoin certificates and not, enough Bitcoin self-custody. And we'll see how that goes.
Synthetic.
I kind of worry about a little bit.
I worry about that too. But the current financial system is like built on a rails of sales.
Yeah.
Where people are basically garnishing your wealth by encouraging you into certain assets.
Mm-hmm.
Like, even if you look at it, any investable stock, like, or they'll want you into a portfolio, like that person telling you that is making a commission on that portfolio, which is hard to get your head around. Like, nobody is really benefiting from you onboarding to the Bitcoin network. I mean, yes, you are, like,
the Bitcoiners do, right?
Well, the Bitcoiners do, but like, no one's directly like taking your wealth to onboard onto the system. Obviously, more people in the network like helps everybody, but there are benefits to every single person to do that. So the people who are advocating for Bitcoin generally don't want your money,
Yeah.
which is like a hard.
It's like Drew and I, we do all of our Bitcoin work and all of this stuff and our writing and all. We don't make any money from it. We don't try to charge any money. We're just trying to help people out because it's so complex.
Yeah. This stuff is important. And I think with importance comes complexity. We're working on some of those hurdles now. I look at like how far certain UI implementations have come, stuff like Sparrow. Even like I hate Ledger and Trezor, but even stuff like that. I remember the first time I opened my Ledger, it was like a fucking nightmare to navigate. And now there's apparently this like easy to use like web app where you'll get your coins stolen, I guess, but at least it looks nice and it's like pretty simple to use for grandma, right? Yeah, like sign me up. Everything is in Comic Sans. Okay, so what is this?
Okay, so you said bricks in the street,
yes,
coins in the
bit in the sheet. Yeah,
I love that. I'm gonna be rocking
Go
that.
ahead.
But so like Drew and I, we're in a unique position in that we're really tied into the real estate world. Like Drew does development deals. I'm doing a lot of residential deals. We did a lot of real estate investing. We're in real estate investing groups and networking with a lot of high net worth real estate people. And so we kind of see the real estate side and we also see the Bitcoin side. And one thing that we're noticing is that there are more and more people that are selling their real estate, selling their bricks to buy the bits,
Yeah.
and that's why we have this like AI image of the bricks sort of becoming Bitcoin. And people, and I'm even noticing this in my like 60 to 70-year-old clients that are saying to me, you know what, I might trim a couple units and just take a hedge with Bitcoin. And they look at that chart on the left and this is a log chart of US real estate versus
this
Bitcoin.
is a wild chart.
Right. And so Bitcoin is literally, real estate is collapsing into Bitcoin over a decade on a log scale. And I don't think many real estate investors are going to ignore that for a long time.
No,
You can't ignore that forever, right?
Yeah.
And like I remember 2017, people were like, "Oh, it's a bubble," and then it didn't go to zero. And now from people that we hear trying to enter, they're saying like, "Oh, well, it's not 65K US." And it's like, well, the same people were saying like, "Oh, it's not 17K." So over a certain amount of cycles, once it stops going to zero, there are certain people that look at that chart and say, okay, my real estate is getting like totally demonetized.
You're getting wall up in Bitcoin terms.
In Bitcoin terms.
Yeah.
And it's really hard for people to sort of leave one economic system that they've always known, like you've grown up in that system, to enter a new one. But it's impossible to ignore that over a long period of time.
When I look at the investors that are choosing to sell real estate and buy Bitcoin, it's not the mom and pop amateurs,
no,
it's the pros.
Yeah.
And so that leads me to believe that there's a movement happening and it may be happening with the strongest investors first. But it's happening. And I think it's going to continue to happen. And that's why I'm so excited about that Leon Wonkum and all that kind of stuff. Because I think that's one of the next phases is through this demonetization and navigating that and taking the power of the government out of their complex system and distributing it to the individual.
Yeah. I think the other thing to keep in mind with this, as you guys are mentioning it too, I'll reiterate, no competent investor can look at this and ignore it. This is really scary stuff if you're a real estate sort of, investor that's counting on that for your future wealth. Because at the same time that, by the way, this chart in US dollars is up and to the right, in Canada, it's, sort of exponentially so. This remains the case in Bitcoin terms. This should scare people. The same house that was 10 Bitcoin last cycle is 6 Bitcoin now, will be 3 Bitcoin in 2 years, all while the price in Canadian dollars has doubled or tripled in the same time frame, right? People don't think about this stuff until they see it. And I'll tell you, from talking to the bull Bitcoin guys, you're seeing more and more home sales here in Canada too.
I don't think people are going to count real returns by taking nominal and minusing inflation.
No.
In the future, what they're going to do is they're going to take nominal and they're going to minus Bitcoin. Bitcoin will be the unit
they should
of
be,
account,
yeah,
the measurement. And
yeah.
Like when I look at that chart, it makes me go, did I spend the last 20 years in real estate
losing money?
Yeah. But I'm happy that, Drew saved me and said, hey, I'm going to orange pill you. And I don't know. I think a lot of people need to start thinking about this kind of stuff and thinking, again, keep your house, but think about your excess economic energy and put it where the fundamentals are growing quickly.
Also, if you don't have a house, like if you're priced out of the market,
For sure.
there is a economic system that can get you.
Yeah, you could. I think renting and saving your money in Bitcoin is very smart.
Yeah.
People are always going to need to live in homes, and they're always going to require developers to produce more homes. But what we're saying is it's hard to ignore people who have bootstrapped their companies to the Bitcoin network.
I know.
So, you talk about El Salvador, and it's like they're going to be debt free in 10 years. You're going to talk about MicroStrategy. How do they make billions of dollars? Like, as a company, all they did was plug into the Bitcoin.
That was it. Yeah, that was
you
it.
have to imagine what is our bias too, in that our businesses both make money selling real estate, and we're spending our free time coming on here to highlight all the challenges.
Yeah.
And so take that into account and we're not collecting any revenue. So we're just doing this to just try and say, hey, here's some stuff. I think the news should be running with that rent control chart and saying, hey, pay attention.
Those newsrooms are funded by the Fed, so that you're never going to see that. But you're right. People should notice that. The other thing, like the problem with sort of like the communication aspect of Bitcoin and real estate and all these things, and the charts you guys have shared, great data today, is that people who are sort of, what's the best way to put this? The people who don't have homes know this, explicitly already, but the people that do have homes also have all the money. And even if they know it, they don't care. If they own a home and they're 50, 60, even for me, right? Like if my home goes down in value, like I don't really care that much. It's my house, it's not my investment property. I think that there's something to be said here for the next generation, not ever even considering, like you guys are saying, owning a home. They will just say, I'm going to live with my parents. I'm going to rent. I'm going to become part of one of these like 75-year AM strategies with my parents and their parents or whatever. I'm going to park my money in Bitcoin and see what happens, because I don't have a better idea. The way that communications are, or the way the information is shared now on Twitter, a lot of the sort of old strategies for controlling public sentiment around CPI, around monetary debasement, around different strategies to kind of, quell the issues in finance before they become too big to crush, they've really gone away. And more people are going to look at stuff like this. I bet you if you got on like a city bus here in Hamilton, you'd probably hear someone talking about inflation if you rode it for an hour. If and you guys, for your line of work, you guys for sure hear people talking about this every day.
Oh yeah.
I know, where I work, I hear people talking about it every day. Len and I get messages on Twitter from people all the time. I never thought about this, that, or the other thing related to inflation, because I never looked. I was always watching, CH News or, wherever you guys are, your local news, or CTV or whatever. They don't talk about it. But now no one watches that anymore. This is the stuff. They watch this show. They watch your charts. They watch your Twitter feed. They read Wealth Playbook. That's what people look at.
Truth can be uncomfortable and inconvenient.
For sure. For sure.
Generally, the best foods for you taste bitter.
Yeah. Yeah, it's true. I absolutely hate broccoli. I had it last night, but I know it's good for me.
Doesn't mean that it's bad for you, right?
Yeah.
Like, so
I think at a minimum, having these conversations are the next step.
Yeah.
To trying to figure out how, as a society, we're going to navigate this. And I'm interested to see what happens. And our last slide is the image that we want to leave people with. Okay.
This is a leaky bucket here.
Right?
Yeah.
So like you take your economic energy and you store it somewhere.
It's Taylor on the left.
That was
you
me.
Can't believe.
That was me in Disneyland, right?
Yeah,
I'm like, oh my God, they're taking all my energy. They put all the holes. They're sticking their straws. When they increase the taxes by 10%, they're increasing the circumference of the hole by 10%.
Yeah.
So more of the value falls out, or they're drilling in a new tax or whatever it is. But look at that lady on the Bitcoin side. She's confident. She's not worried about her water. She's storing it. And not only is it stored and protected, it's growing. Mm-hmm. It's growing with that utility value. And so just think about that the next time you're going to buy an Airbnb or a rental property, get it. Don't buy a leaky bucket.
I love it.
Taylor and I have studied like historical hyperinflations and high inflation environments, and we don't want to say that we didn't say anything.
We feel duty.
We do.
Okay, so maybe we'll close with this then. We've gone an hour and a half. You guys have been very generous with your time. I know this is a bit of a drive for you. What is the sort of, if you had to give me like your 1 year and 5 year sort of what's next horizon, not necessarily in price, but I think you and I spoke before about extending amortizations would be something that would become more popular. We saw that since we spoke last. We've seen these stories online of people going to 45, 50 years, Freeland talking to banks, telling them to work with borrowers. And I don't know what else that means besides extending AMs. What do you see 1 year, 5 year, both in the real estate side and maybe in sort of the wealth protection vis-a-vis real estate side that people are not ready for now, investors are not prepared for at the
You
moment?
go first.
Okay, what I'll say is studying high inflationary environments, the most politically popular thing is to put rent controls on every property. Not just right now we have rent controls on residential, but also not on new builds.
Yeah,
I think
pre
it's
2018.
2018.
Okay,
Yes.
so you have 6-year. Okay.
So if you, and that's why the condo market did so well, right? So Toronto, brand new condos were built. You can keep up with inflation. You can increase the rents. In an old duplex outside of the city, you couldn't do that, right? You're at the whim of 1%.
Ugh.
And so you're just watching, and you're okay, right? If you're locked into a mortgage that made sense at the time. But when that comes up for renewal, you're like, okay, well, the bills due, and I can't recalibrate to market conditions. So what I think will happen, and maybe you disagree, Taylor, I don't know, but I think market rents or rent control will come on every single property.
Wow.
And that's historically happened in high inflation.
How do you sell something like that to people?
You sell it to the renters, right?
Yeah. Okay.
Who you say, okay, well now we're going to put a stamp on it. This happened in the fall of the Roman Empire. They had an edict, a price edict, where it's like, okay, these goods are now these price. They had this.
It creates a black market, is what it does.
Yeah, for fucking sure it does.
When you try to like suppress market conditions by saying like this is the price of something, you're putting a beach ball underwater, and it requires more effort to like hold it there. And then if you let the market come back, it'll explode to whatever. You're seeing that in Argentina right now. Things are becoming more expensive. Some things are becoming cheaper, but you're seeing the free market like work itself out, and it's more inefficient for the government to control pricing than to have it sort of have a natural calibration.
So I agree with everything you said. I think the rent control is a little bit scary, but if you to ask my like, what did you say, 1 in 5 years?
Yeah, give me something.
Sure. So like when I look at real estate, I think that we're going to still have nominal increases. So I think that the values are going to be going up, but not because the intrinsic value is increasing, more because the currency is depreciating and because the system is continuing to operate. But like I'm a Lynn Alden fanboy, and I agree with her view that we get nominal, maybe we get prices going up at 5 to 7% a year for the next decade, but the currency is devaluing at 10 to 12. And so when you wake up 10 years from now, your townhouse is $2.5 million, but if you sell it, it doesn't buy you what it bought you when it was 800,000 today.
When are people going to start caring about that?
I think they're already starting to figure it out as the cost of living is rising and the dollar's decreasing. But I would also say my strategy, like, because I know there's a lot of people that are in Bitcoin that watch this, and so they already know what to do. But for like the normies, what I would say is you want to avoid debt. You want to have more exposure to the increasing money supply. So like S&P 500 and Bitcoin, they grow as the money supply increases. And you want to have less exposure to the bond market, like the Bud Light bond market, where everyone's faith in the institutions and the governments is declining, and I think that's widely reported. And if our faith in the government is declining, it means that the risk of the government is increasing. And if the risk of the government is increasing, the cost of their capital should increase. And so we want to avoid the bond market. We want to avoid too much excess real estate. But I think you still need to do something. So I like US dollars over Canadian dollars.
Sure.
But I think Trudeau's opportunity for us is that all of our debts should be in Canadian dollars and all of our assets should be in USD or BTC or MicroStrategy.
Could you imagine?
Or whatever it is. Yeah. And that's how I'm structured. I keep all my debts in Canadian. That way, as they're devaluing the dollar, it's benefiting me.
Yeah.
So I don't have to worry about trying to get Pierre in because it's okay because he's devaluing the debt. But I think everything will be okay. I think the government has enough control to keep manipulating the system. But I think the property rights are going to continue deteriorating.
Everything's going to be okay. They got enough control to keep manipulating.
They have enough control to keep it going, to keep the listen, they're the best at the Ponzi system.
Yeah,
they're literally the best in the G7.
Yeah.
So I think they can keep it going. But the buying power decreases.
It's harder
the
to
conflict
ignore.
increases. And there's going to be more instability, more conflicts between landlords and tenants.
Well, you're seeing recently grocery CEOs being called before Congress.
I love that.
Because they're suddenly greedy, right? And they were not greedy previously, but suddenly
they just discovered greed.
Just now, since the balance sheet is
that's what happened.
I think they'll also regulate pre-construction more. We're seeing a lot of problems in there. And so I think ideally with that is when you buy a pre-construction, the bank should guarantee your loan at that time. So your rate should be locked in at that time. again, we should
Woo
be.
lad, woo lad. That's a fucking bold one. I don't
We
know if
need
they're
that.
gonna do that. Okay.
Well,
okay.
otherwise, we're just giving people levered options.
Yeah.
You know, and so we have. If we can't do it that way, then don't sell it until it's built.
Mm.
You know, either have a stable system. But what's happening now is the builders just offload all the risk onto the pre-construction purchaser. If the market goes down, they enforce it. If the market goes up, they try and get out of it. It's a joke. You know,
Truly.
so we need more
Truly.
regulation there for sure.
I love it.
My last thought is how long can the system go where your wealth is being leaked out of various assets? You can say bond, you can say stock market, you can say real estate, before people sort of start to realize that those investments aren't keeping up with their bacon.
Yeah.
Yeah.
So I feel like in the last year or two, you've just speaking to normies, there are more people that realize that there is a problem, right? So
The frogs are starting to feel the water.
Yeah.
you can only boil to a certain point, or the speed at which it's increased, right? Like we were yelling about this like the start of COVID, like this is going to make its way into prices. Like this inflation is an issue. There's inflation an issue. Inflation is still an issue. 3% is not the number of inflation, and it's not going down.
If the inflation is 3%, why are government taxes 10 to 15?
I mean, everyone knows the
probably
answer to that because CPI is completely made up. It's just this fabricated, RNG stat that no one actually looks at and is favorably manipulated for whatever the narrative is they're trying to spin, right?
We wrote an article in a thread called CPI Psychosis, where it sort of like breaks down what the actual rate is. But anyway, we won't get into that here.
Okay, so tell people where they can find. First of all, thank you both for coming. I really enjoyed this conversation. I want to give people a handoff to where they can find you. Tell them about your Twitter. Tell them about Wealth Playbook, Sugar Team, whatever. Floor's all yours. Go nuts.
You go, Taylor.
Right. So Wealth Playbook is our blog. We post stuff there. We probably should post more, but we're trying to give these key concepts there. And then you can wealthplaybook.ca is the address. You also can find us on Twitter. So I'm at Taylor Sugar.
I think I'm _Drewsy.
Yeah, or Drewy or something. Yeah.
Drewsy.
Yeah.
Just DM us there if you have a question. That's probably the easiest way. We're not great at checking the website.
Comment section just collecting dust over there on the Wealth Playbook.
But we do want to collaborate more with people that are focused on this real estate and Bitcoin topic. And I think it's a space that deserves more work. And so consider that an open invitation to work with us. And we're ready to collaborate and work on it.
I love it. We got to get you with the Caradzas. Boys, thank you once again. People listening, watching, enjoy this. It's not live, but I'll be in the chat. I was in the chat, I guess, at this point, 7 o'clock Wednesday night. Anytime I do these live ones, I'll put them up at 7 o'clock unless I forget or have something better to do. So anyway, take care, everybody.
Thanks for having us.
Thanks for having us.